Good morning, everyone. Thank you for being here. And if you're not here, you're watching at home, there should be 3 videos. Also watch for a video tonight, late Pacific time, so you might be seeing it in the morning tomorrow to prep me for the week. This is what I do for my own self, and I am sharing. Let's see. I'm starting with the IWM because I feel like that's where that's the only place where there is a debate. Otherwise, just up and away. The S&P and the Nasdaq are broken out to new highs every day. They did trend for the last 2 days in a row, which is pretty rare to have a trend day, let alone 2, and in the same direction. So 3 rare things back to back to back. Let's see how this movie ends. I say this because there's a discrepancy between what's going on in a dozen stocks, maybe even 6, and the rest of the market. And there's also a discrepancy between Main Street and Wall Street. I'll explain the second one first, quickly. Main Street is not as healthy as Wall Street makes it out to be. That's what can be happening, okay? Do your own research on that front. The other one here, what we're looking at, the discrepancy between a large number of stocks and just a handful of number or a dozen, is mathematical. I'm looking at the IWM, which represents 2,000 stocks. Mathematically, they need a 6% rally to break out, and they cannot afford to lose 3%, maybe 4%. In other words, they have a trigger above and a trigger below, and they haven't been able to time the breakout with the major indices. If they do, I think we rally another 15% across the whole thing. Meanwhile, I expect something outside that we don't expect to break this. This has been going on for too long, and it's going to have to end, and it looks like it can't end on its own. It needs a catalyst. So brace for impact, for something to come out and stir the pot. Don't know what. Would it be good? Would it be bad? I don't know. It could be good, and we break out, and we have another 15% rally. Or it could be bad, and we have a small correction, which could turn into something bigger. In any case, I want to be ready for both. And my trading pattern, my trading process is going to continue to being the same, somewhat boring, but I don't want to be caught too long, too late. And I don't want to be caught too short with something that I could be right in the end and still lose money. All right. So rate cut, I don't think the rate cut will do, because we still have inflation. I don't think they can justify the rate cut, but that's a different conversation. So today's list is about 90 stocks, and it's going to be broken up into 3 different videos. I'll start with the letter A. Oh, and I think we have another round of earnings coming up, starting with the banks, perhaps as early as this coming week. Double check your schedules. So Agilent is trying to hold on to the floor, which is pretty strange. If they lose the floor, and it's right here at 124, they might come down to 112. I say 112 because that's a giant gap. I'm not sure that that's a real gap, but it's a real head and shoulders. So I wouldn't short it for that reason, but I should expect a last gasp bounce, and they need to get to 134 or higher to avoid that. Otherwise, you have a neckline, looks like a head and shoulders, and it looks like if the bears are able to lose it, so if they get to 124 or 123, they might be able to push it down another $10. So be careful. ABBV, let's go down to a slightly lower time frame. Looks like it's going to have a problem at 169 plus. No Apple on the list. Pretty interesting, huh? Well, it's at all-time high, is it not? So what's the S&P doing? Apple would be doing. ABBV 163 needs to hold. Otherwise, you probably end up at 155. You need to get out of 171 or get to 171 in order to erase that problem. 168 is a problem, that area right there. Do I have lines? I must. There we go. So we're trying to hold support, and we have a resistance area that we're dealing with in ABBV. So if anything, I wanted to add a line, I would add it here. I would also say this is a resistance area. and this needs to hold. Otherwise, you come to 158. This down here is something different. We can discuss it once we get there. Airbnb, bearish pattern unless they take out 155.5. So they could drift lower to 149.5 and maybe 147.5. Relatively short-term comment. I think you're asking for that. As from an investment perspective, something weird going on with this company. So I feel like regulation might come out and change some things. If we have a real estate problem that comes up, I'm not sure how they're poised for it. You can look at it from this perspective. 157 looks pretty pivotal, right? So I'm going to say that there's going to be a lot of fighting over here. And it could be pretty resistive, and a lot of support here. So ping pong inside this, and if they lose 140, which is not in the cards yet, you might end up to 124. So if I'm looking to invest in it as a company, it's not an obvious entry point, but I can, as long as I leave room to more than double the order at lower prices. Accenture, good company. I don't know why it can't bounce and hold. The fact that it's trying to hold support when the market literally cannot stop rallying is concerning. The earnings reaction, you can put a box around it. You're pretty much stuck in that prison for a long time. So this will be a draw box, and don't do anything around the edges. I don't know why I did that. Okay, that's good enough. So if we come down towards 290, don't be shorting it. And if you're short, that's where it would exit. If I'm coming up towards 315 or higher, I would expect a lot of resistance. 312, if you beat it, it might give you some oomph to get higher, but it's not going to be easy. It's going to be a struggle. Shorter term, you can see how 308, that red line, I didn't draw it. That's the highest point of volume. So anything above 308 is going to be hotly contested. Adobe, one of the blessed companies, I guess. Let's see. Is it? Not bad. That is an exit point for me. If I look left, this is a huge level of contention. I can copy this one and put it right here. I can confidently say there should be a lot of resistance here. Now, the Adobe story is changing rapidly because of artificial intelligence. They now have things that I can do as a non-Adobe expert with words, they tell me. If that's the case, this becomes a software that has a wider audience. Like, if I know I didn't have to hire somebody every time I need to change a color on my document or video, I'm more likely to subscribe to Adobe myself. But how many pros will cancel? I don't know. So anyway, the stock itself is going into 590, which is a zone. In fact, if you want one candle to guide you, pick up the candle from February 13th and put a box around it. That should be a zone. That should be a huge resistance zone. And anything that's that pivotal, once they take it out, becomes a catalyst. The chart itself is uninspiring. It's a mess. For such a company that has a pretty stable, like their subscription-based model, the P&L is somewhat stable. And then it acts like this. This is Wall Street taking money out of your pocket because they manipulate our minds into thinking that things are changing by upgrading and downgrading and putting estimates that are not feasible or putting estimates that are super feasible to manipulate our minds into just chasing price. Super stable company, just trade the facts. The facts are in the P&L of the company itself. Up here, for valuation purposes, I added this line here. This is some evaluation visual guide. PE, but PE, it doesn't apply across to everybody. I wish you can also add price to sale. I'm going to figure it out one day. But this is a growth company, so PE is not what it's all about, but it's still a good visual guide as to how expensive or not. AFRM, somebody asked me about it this week. So from a trading perspective, this could be a starting point. It's falling into a prior base that gave it upside. So I would imagine upside from here from a trading perspective. It also can double as a starting point from an investment perspective, as long as I don't put more than half the position on. So if I wanted to own 300 shares, I would put no more than 100, 120 maybe, for me personally, 150 maybe. I usually like to leave the opportunity to double and then add more on top of that. I usually say double and then double the double, but that's not always doable. And since it just got a big haircut, maybe I can take half. But I have a feeling if the markets hiccup, that's a big if, this one will be in the low 20s. I don't know how exposed they are to lending. I don't know if they carry their own paper. I don't know if they flip their paper after they make the deal. I think there's a high debt problem in the US, and it could turn into something nasty. Could. I don't have evidence. This was a target from before. And so this is an area where I would get out of shorts and consider longs. AI, I was nitpicking them before. I was like, you're called AI and you can't grow your sales, and now it looks like they're headed in the right direction in sales, but the spending is out of control. I don't know if he's trying to dress up the P&L to sell the company or what, but hey, if you believe in the AI, maybe you believe in this company. Right now, it's exactly in the middle of everything. So if you go long, you're guessing. If you go short, you're guessing. If you're an investor and you're going long, I get it. Just leave room to double. That's my opinion. Approaching 33 is going to be a huge problem. Taking out 33 will probably give you 41, but you have 37 in the way, and that's a huge problem as well. So you have two major failing zones above, multiple bounce areas below. 26 looks pivotal. So if it drops into the low 20s, opportunity to get started on the long side. I personally don't like it. Maybe it's the guy. I don't know. Just study their P&L. Akamai, here's a company that has an extremely stable P&L, and it's acting like PayPal. It can't stop falling. What is happening? So if the markets stabilize, maybe this one is a good long to get back to 100. Meanwhile, you ask yourself, why is it selling off like this? Sometimes Wall Street is wrong. They were wrong on PayPal. They were wrong on CHWY. They were wrong on a couple other companies, Square. So maybe they just have it wrong. Look into why. Look at the PE, how it's falling down. That's a good thing. So fundamentally, there must be something that they're not telling us, or it's that easy to go long. If somebody's going long in Akamai, that's fine with me. If you take out 92, I think you get to 95. And so it will have risk from the overall markets. We are at all-time highs. What if we have a 5% dip in the next couple of months? This one will go lower, I guess. But it's worth a shot from an investment and from a trading perspective with a stop. Amazon, I wouldn't touch it. One of my favorite companies of all time up here. Not for me. So I wouldn't look at the PE for Amazon. That's being nonsense. But way too high for my taste. This was a target from a while back. Zone. See that red mark up here? Like that was from last year. Once they broke out of 144, that's the shot. And that's way above. That's high altitude for me. We're in Mount Everest up here. Let's get back to base camp. If you're asking me from a trading perspective, okay, let's make a couple comments. They're buying every dip just like the market. You take out 201, you get to 206 probably, 205. Meanwhile, you have buyers at 197, better buyers at 194 and 193. You have open gaps down to 190 and actually down to 188. And by open gaps, I don't mean gaps in the chart, gaps in the candles. Look at the hole in volume down below 193. You can't build an empire based on Swiss cheese charts like that. That's the second time it closes at 200 in 1 week. 200.00. One of the members, Dave, pointed it out the other day. That's 2 times in 1 week it closes at 200.00. Pretty bizarre. But there it is. Okay, so who's this? Apploven. App development company. uh, okay, they're looking to break out. They poked above and they're trying to establish a base. So if they can establish 82, 83 as a baseline, they can come back and get to 98, I guess. The P&L is okay. It looks like they're growing. So there are no signs of, hey, this price action is not warranted. It is following the market, looks like. So if you're looking to get engaged on the long side, I would ask you, are you a long-term investor? And if you say yes, then I would say, why now? But I want to, and I don't care. I'm in it for the long term. I would say, okay, so if you're in it for the long term, why the panic buy? I don't mind being down 5%. Okay, so why do you mind missing on the next 5% up? If I'm telling you that this is not an obvious entry point and you're desperate to go in, maybe your emotions are pushing you into the stock and not your mind. So I'm just saying, it's not an obvious entry point, but it's a very bullish chart. Everything I said about whatever that company, APP, I say here. And this one has an incredibly weird P&L, so you can't say, oh, fundamentally it's this or that. They don't sell widgets, they sell ideas. Therefore, their gross margins are mind-boggling, to say the least. So we went long this one on a couple occasions, nowhere near up here. I'm confident people want to own the stock for a long time. I'm not so confident this is a good time to do it. So I'm not sure why you're asking. If you're looking to get long, I would beg you to not take a full-size position. At least that's what I would do for myself. At least sell puts instead of buying the shares. Aspen. What did they do? So this is a P&L that's pretty good. Okay. Also, what did they do? Manufacturing, aerogel, insulation, energy. All right. So I'm going to tell you, if they lose the support from this week, they have a short trip down to 9. There's nothing holding them up before 19. This is no good. That's like from a charts perspective. Is this an all-time high? No. Good grief. Okay. So now I have to add to it. If they take out 32, they go to 48, so that the bulls don't get upset. I need them to deal with this candle. So if you lose the low from last week, you're at risk of coming down and filling most of this candle. Oh my God. Okay. I would be out on this one. Between here and 14, I think that's an end zone. Yeah, there's no income, nothing but spending. Do your homework on the company. The chart says I would be out, but the company, I don't know anything. So if you think it's an investment for the long term and it's going to be $100, please do not get out. But if you're asking my opinion from a charts perspective, this is an end zone rather than a starting point. So here's another conundrum here. So AVGO, that's Broadcom, excellent company, heavyweight in the S&P. Why is it down here? Look at this P&L. You can't find too many companies with a better P&L than this one. So my question is, why is Broadcom up here, not up here? That's an honest question. So I would argue that the future of this one is better than Amazon on the memes that are going here, and it's lagging. So maybe this is the next one to split. Take out 1770, and you probably will make a new high. They are buying dips. You have to ask yourself, do they want 1500 first or 1920 first? Oh, it is splitting. Oh, okay. There you go. Oh, there it is. Yes, it is. There we go. Thank you. It's splitting 10 to 1. So this is going to be $170. So then the question is, are they going to take out the recent resistance from last week in order to have a shot at this? Or are they going to dip into this body of candle from the earnings? Big money likes Broadcom because the price is high, options cheaper. Yeah. So if it was me, I would probably sell a strangle. But you need a big account in order to do that now. After the split, it will become much easier. Good company, buy the dip up here. I'm not sure why I would go long for trading. BIDU, I would step away from all of those companies. Now BIDU is below a target I had. If you look left, a neckline they lost somewhere around 103. Let me zoom back out. I have a friend of mine who's stuck in this. So if you're trading a chart that is falling into a prior bounce level, I get it. You get long into 80. And if you're investing or adding to an investment, I don't get it. You should do your homework. So from a trading perspective, if you got long BIDU for a bounce, okay, but you should know that it could go into 80 or 79 before it does bounce. Intriguing proposition though. Very intriguing. I'm almost tempted to buy a call, but I'm not going to. So trading, it's an intriguing proposition. Investing, do homework. The chart says, okay, you're okay in the next $3 below. BITO, warning, warning, warning. I issued a warning on crypto, which also doubles as the warning on stocks. Good. My thesis is that risk appetite, global risk appetite, not just Wall Street, global risk appetite. People worried around the world express their worry or lack of worry when they buy crypto. Crypto is a global asset, decentralized, and perceived as crap. And if they're buying crap, that means there's no correction coming. If they're selling crap, that's what they sell first before they sell Apple. So this is a target that we had for crypto, but it's a start. I'll address it from the Bitcoin perspective, and I'll say it this way. Bitcoin needs a bounce ASAP, and if it doesn't get it, and I think from memory it's like 61,000-ish, I think it could come down to the high to mid 40s Bitcoin. So this one can come back down to our entry price, which is the low teens. Not a forecast, it is a possibility. So rallies into 23, I think will be sold hard. And let's see if they can hold 18.5. Okay, but if you did buy it on my mark at 11 or 12, you got paid probably $8 in dividends already. So your cost basis is so much lower that you really don't care where it goes. I wouldn't add here if that's what you're asking. BLDR, I said let's short it miles ago. If you were in the morning with me every day, you would see me how many times I said BLDR up here. I was like, I don't understand. We had discussions with pretty smart people in our room, and they saw upside. So it was too high in an industry. Anyway, so they triggered a bearish setup at 175, and they more than satisfied it. So now they're just selling rallies into a descending wedge. That's like what the market is doing. Opposite, right? So they can't stop falling, and they're creating a very sharp descending wedge, and those usually get bounces. So the question is, when they bounce, how will they deal with 155 to 160? I think it'll be a wall. The target of the bounce will be 165. If it gets back to 165 and I'm long, I would exit. Tough resistance. So this here where they're at is old levels that they fought over a while back. They should have a lot of support below. So if I'm long and I didn't get out yet, maybe this is not where I get out, but I will use strength to get out. Let's see here, bearish bet on valuation and some technical setups. The chart is vulnerable for dips that could take it to 178 zone. So you can, if I said take it to 178, you can tell how high it was when I said these words. So it was, anyway. So now it's it's not an exit. BRZE, don't know what this is. P&L pretty spiky. Why is it falling out of control? Customer relationship. So this is some sort of a CRM software. This is concerning. The P&L doesn't have anything concerning on the face of it, and the thing is falling out of control. So technically 44 is a wall. Anything above 41 is a wall. If you can take out 43, maybe you can get to 48. And I would exit there. It's concerning that it's doing this. If I zoom out, this is in the middle of the zone where you have a lot of action below, a lot of action above, so you're kind of stuck. You can see how 44 zone is going to be a problem. It's an opportunity, but it's a problem. Not a lot of investing information in that stock chart. Okay, this is BWX. All right, if you get to 97, maybe you can shoot to 100 and see if you can tackle that giant candle. Nothing exciting in the P&L. Supply and provision of nuclear components and products. Okay, so I feel like the nuclear conversation has run its course. So now they have to earn any moves in the chart by delivering something in the P&L or delivering something with a job owning from the company. 100 is a huge catalyst and a huge problem. If they can take it out, they can get to 110. Meanwhile, they have support through 88, 87. You lose 87, I think it goes back to 80. Trading comments. Blackstone stuck in the middle. So this is a company that we've traded several times, but it's not very liquid, so I haven't traded in a while. This P&L is pretty crazy on a yearly basis. Quarterly, not so crazy. Right in the middle of a zone, so I can tell you support through 116, resistance through 132. Just trade the range. I don't think it has enough in its story to take out 132. I don't think it has enough scary things to take out 116. However, if you do take out 116, I can see it at 108, 109. I would go long down there. I do have alerts. No, I don't. So I'll put an alert. What do these guys do? Insurance. Okay, so the P&L is stable. It's an insurance company. The chart is unstable. 262 or higher, a lot of resistance. 259 is a level they should have held and they couldn't. And they just covered a gap, but they could still drift lower towards 248, 246. So you're approaching support. I don't deny that, but look at it. It's not bulletproof. So everything through 240 is support. You lose 240, and that's a different conversation. You lose 240, you're going to be at 225. Why would I say that? If you look left, there was a gap up in the beginning of the year, January, February. So I don't know what happened. I don't see any gap up in the P&L. Why this? So it's a threat. I wouldn't get long here. From a trading perspective, yes, I see it. From an investment perspective, if I'm long already, I'm not adding. If I'm looking to get long, I would just take just a piece of the action. Charge point, I wouldn't touch this industry with a 10-foot pole. This one looks like the P&L is taking a step lower. So if you look at on the bottom right, if you look on the yearly basis, it looks like it's still growing, although the losses are growing fast. But if I look at the quarterly, I have 3 lower quarters than the 4th one behind them. So I don't think it's a cyclical thing. I think they took a loss on revenue somehow. So study the industry if you're an investor in this company. So if you're an investor, study industry. If you're a trader and you think that this is a gap that you would love to be long, I would caution you against that logic. Of course, the meme stocks can take it over and it can go to $6,000 a share. I don't know. I don't care. 2.1 could be good news to get you to 2.5. Meanwhile, anything into $1.25 is support short term. CHWY. Speaking of meme stocks, All right. If you came to me because now you think Chewy is a great deal because Hello Kitty guy is all over it, I'm going to say, well, he knows more than me. You should just go follow him. Chewy's perspective, Chewy's business hasn't changed. It's solid as can be. We said buy it on dips. It was a struggle to make money on these dips because the rhetoric was bullcrap and lies from Wall Street. Amazon eating their lunch, not true. Margin deteriorating, not true. A stupid meme company gets into it, takes it to 40. If I was long Chewy and I didn't get out at 38, I need a lesson in risk management. I wouldn't touch Chewy here. If you're a trader, get into Reddit and trade it with Reddit. If you're an investor, this was a gift to get out of Chewy. I mean, it's a good business, but they just gave you however much, 160% exit door. I would have taken it and left it. I would not touch the stock for months from here. If it comes back down below 20, I'll consider it as a long because it's a good business. CME should be a stable business. Look at this P&L. Are you kidding me? Look at this. The bottom line is almost as big as the sale. I mean, this is like better than NVIDIA. What? Why is it? Okay, someone explain to me, with this P&L, how could the stock be so violent? That is proof positive at the manipulation that Wall Street words has on our minds. Like to convince somebody that it's so much better up here and so much worse down here when the P&L is like this. This P&L is so good, it's fake. It's fake looking. Sales, profits. Let me switch over to Apple. Sales, profits. Look at the distance. Switch over to CME. Sales, profits. The margins are insane. And this is what the stock does? Okay, so down here, it should have a lot of support into 190, 188. And it could rally back to 206. If you're an investor, you should just invest in the CME on dips. Chipotle split, finally. Great operators from a restaurant perspective. Not an obvious entry point, although this is a buy the dip. Even when they had a bad burrito, and I don't think anybody died, maybe one or two people, but it was a bad stint for them. And they dropped 40% in sales. So if this one comes back to 48, it'll be a gift for investors. If I'm investing up here, I should be more trading. All right, so let's talk trading. If they go to 59, I think they go to 54 in a series of lower lows and lower highs. Okay, it has upside potential, but if they lose the support from last week, I think they drift lower to retest prior supports. Investment, solid. I wouldn't add, I wouldn't get in here. I would wait a couple of months, or at least a month. Cisco. Drifting lower lows, lower highs when the market can't stop rallying. Not good news, right? So imagine if they lose 44.5. Just imagine what happens. I think it loses 40 in a series of lower lows, lower highs. It needs to get back to 50. There's no doubt about it. And 50, I would exit completely. Delta Airlines, earnings in 4 days. Avoid. So they lost the first line of support. They're into the second line of support. And that was my target. If they lost this was my target. It was ABC. ABC. They're almost here. So if I'm looking to get long as an investment, I don't know why would you do that. Their business is not that great. Just do a half position. So this way, if it gets killed on earnings, you can add the second half 20% lower. Otherwise, why don't you wait out the earnings reaction? It might pop to 49, but it will meet a lot of sellers at 48 to 49. So not judging how they're going to react on earnings, rallies are going to be met with a lot of sellers into 48, 49. Meanwhile, you could drift lower to hit my target. Disney, good business, good management, good revenues. There's no issues on the P&L. Don't fall for the rhetoric on Instagram. Oh, they lost billions of dollars. They didn't lose anything. You can see, if they did, you would see it in the P&L, and the P&L is still healthy. So all of that is rhetoric, propaganda. So I love a good story, but this is not a story. You have a lot of buyers below 95. So if it comes down into the low 90s, I would jump all over it. Up here, it's not a bad deal. But, you know, this is a target we had from up here. And you can't find rallies when the whole market cannot stop rallying and your fundamentals are good. What's going on? Rallies into 101 are going to be met with sellers. If they clear 104, they probably get to 110. Break 104, you probably get to 110. Earnings in 30 days. I feel like we missed the break. No, last one. DraftKings, almost similar comments to Disney. You have a lot of resistance above. That letter R, the big boxy yellow thing, the green path, we're testing support. This also was a red target. So even coming here was a target. They rallied back into the neckline and failed. So if they lose 34, I think they lose 30. And I think they have a lot of sellers around 40, plus or minus $1. The P&L is growing fast. That's the excitement in this business. Earnings in 26 days. So it's a good investment for the long term. If I'm long already, I'm not adding here. I would leave room to add on a disaster day. Maybe it comes, maybe it doesn't. But if I'm long, I shouldn't panic not being long. Okay, that's video 1 of 3.